Hi everyone and welcome back to the channel and to another video. Today we're going to be covering Micron, ticker symbol is MU, traded on the Nasdaq, and this has been requested quite a few times on the channel and also placed second in our bi-weekly poll on the Patreon page. So today we're going to find out if Micron could be a good buy right now. For disclosure, I do own Micron in my own portfolio and have done for about 9 months now, but the stock is in a very different position now to where it was last year when I bought it. So my biases, if I had any, should be nullified by now. For those of you who didn't know though, Micron Technology is a semiconductor company that develops and manufactures chips for memory and storage solutions. Their products are used in everyday items such as computers, mobile phones, consumer electronics, automobiles and servers. They sell 3 core products. The 3 core memory and storage products are DRAM, NAND, flash memory, and 3D XPoint. But instead of just showing you these product sales results, they split their business into 4 segments that reflect the industries and customers that they serve. These are CMBU, which is the compute and networking business. This makes up 44% of revenue, 50% of operating income, and it serves the cloud, enterprise, graphics, and networking markets. We've then got MBU, which is the mobile business unit, makes up 26% of revenue and 38% of operating income, so it's the most profitable part of the business. This serves the mobile device and smartphone market. Then we've got SBU, which is the storage business unit, making up 16% of revenue, but hardly any profit, so it's not really a profitable part of the business. This unit sells component level solutions, i.e. data design solutions, into enterprise, cloud, and consumer storage markets. And then lastly, we have embedded business unit, which is EBU, which serves the automotive and industrial applications markets to help applications such as voice control, automation, and machine-to-machine communications. All of these industries need a lot of memory power, and a company like Micron who can provide memory and storage solutions. Now, for me, this segment split is more helpful in spotting trends and especially identifying the cyclical nature of Micron's business, because this is a very cyclical industry as demonstrated in Micron's sporadic results. I'm not going to pretend to be an industry expert because I'm definitely not. This is quite a complicated industry for people who are not familiar with it to understand it, and there are a lot of variables outside of the business itself that dictate success or poor performance. However, this is sometimes an advantage for investors who are willing to sit through volatility in order to reach a long-term destination. If we look at Micron stock price, you can see how ugly it looks. Lots of steep drops and fast run-ups. But if you ignore the 1999 high that it's actually never been able to reach since, the stock has been a great investment. Let's say over the past decade, locking in over a 2,000% return in around 11 years now. So it's been a good investment since then. And that's because the business has performed well over a long-term period. Now, just looking at the margins and other financials, you can see the cyclicality play out, obviously becoming oversaturated in the years prior to 2021 with gross margins declining, meaning the cost of materials or supply, things like that were going up. This also meant revenue started to stagnate for a while as well. They had that amazing year in 2018 with 30 billion in revenue and 15 billion in profit, but now I think we've started to see this level out. Gross margins have been stabilizing and there's a visible bounce back in revenue growth. You can see after a period of sustained declines, we've seen double-digit sales growth for 4 consecutive quarters. And looking at analyst estimate, people who cover and know the industry, they expect this revenue to continue for the next 2 years at a compound rate of close to 30%, getting them back to above that big year they had in 2018 in terms of the revenue number. They also expect profit margins, being EBITDA and net income, to expand quite dramatically to previous levels as we go into this positive stage of the cycle. And the last thing that gives us an indicator of their current cycle and where they are is the balance sheet. And here I want to hone in on the inventory levels and see if they're dropping, suggesting that they're not holding stock and unable to fulfill orders, things like that. After all, this is a manufacturing company, so this sort of information is available and it's good to utilize it. And as of today, we're seeing these inventory levels drop. Only a small amount, but it's still a good sign. We're not seeing it build up like we were before. And now this is all great, but I want to see if the stock is still offering good value. After all, it's almost doubled in the past year. For me, it's hard to want to buy more Micron at this level, considering I bought in 2020 at $47. And if I'm being honest, I bought more because of its blatant cheapness rather than the pure belief or conviction in the company or industry at the time. I think the trailing 12-month PE was below 10 or something like that. I also saw many super investors like Lee Lu, Monish Pabrai, David Tepper and Seth Klarman all held big positions, which may have swayed my bias to buying even more. But if you're someone who is interested in Micron, then the good news is none of these investors have sold out of their position, and actually most of them added to their position near these levels. And Sequoia even opened a new position at this level, which is a good sign. That's a very, well-respected fund. But all things considered, I've done a refreshed Dcf analysis on Micron for today with a few simple assumptions. I've come up with what I deem to be fair value, and that fair value is around $93 per share, or 106 billion for the entire company. I'll just walk you through the assumptions here, but just a warning, this is an incredibly hard business to do a DCF model on. It will no doubt be wrong, as I'm just looking at the medium to long-term averages rather than trying to guess the size and frequency of the dips and financials and the cyclicality of the business, because that will be near impossible for anyone to do. So we're just trying to look at what could be a 5-year average for this company. And what I'm projecting is that over the 5-year period, this business, led by the growth in its industry, will achieve an average of a 12% growth rate in top-line revenue, getting it to around 41 billion in 2025. Now, analysts target in 2022 is expected to be 35 billion of revenue. So you might look at that and think, well, it'd be really easy for them to get to 41 billion in 2025 if they manage 35 by 2022. But remember the dips in revenue and the cyclicality of the industry. So we're trying to account for that, and we're just lowering the average down to around 10 to 12%. Now, this is still a lot lower than the 5-year average that they've achieved in the past, being 18%, but I think it's prudent to do so. Then I'm taking the 5-year average for profits as well and just projecting that into the next 5 years. And I'm taking their past 5-year average margins to account for the volatility. And actually the past 5 years have provided all phases of their market cycle. So that's good and should give us a fairly accurate average to go by. Here we aren't expecting any linear improvement in the business, but rather just a gradual improvement over time. And if we compare my forward assumptions, like I say, to their past performance, then actually they are quite conservative. Now, to get our terminal value, what I've done here is I've taken two multiples. I've got an EV to EBITDA and a PE ratio. And the main reason is because EBITDA is so much higher than net income, as you can see. If we look at the previous years for Micron, EBITDA is sky high compared to net income. We've got an average of 45% over the past 5 years, whereas we've only got 25% on net income side of things. And that is because at the end of the day, Micron is a manufacturing business that has a lot of depreciation expense from the purchases of property, plant and equipment, which is required to increase and maintain their production capacity. So it's a necessity of the business, but it's also an expense they incur off the balance sheet. Therefore, we're averaging the two. I've got an EV to EBITDA of 12 times, and then I've got a PE of 15 times. Both quite low for the current market, but this is a stock that does tend to trade cheaper than it should do to account for the volatility and cyclical nature of the business. Now, like I said, this gets us to a fair value of $93 per share for Micron, or 100 billion for the whole company, meaning they're 12% undervalued by this DCF model. Remember, this is using my required rate of return of 15%, not a weighted average cost of capital, not a discount rate that reflects the 10-year treasury or risk-free rate being near an all-time low. This is a discount rate that reflects the return I'd need to earn each year as an investor to want to put my money at risk in this company. And looking at the analyst consensus target on tip ranks, which I'm not one to follow analysts all the time, but I do like to compare sometimes, and we see they have a fair value of around $117 per share for Micron, giving it a big 40% upside from the current stock price. They're probably using, though, the standard 10% discount rate. They're probably not using a 15% discount rate on their models like I am, meaning our assumptions and forecasts should be somewhat similar. To give you an idea of what I mean is, if I drop this down to a 10% discount rate, then this model or forecasting shows us that Micron is around 40% undervalued as of today. Meaning, like I say, we probably have very similar assumptions for the future of this business if we're looking on a 5-year forecast. But as I said, I already own Micron and will not be adding to the position at the moment, but we'll definitely be holding it into the future. And I was very much glad to see that it still seems somewhat undervalued, even with the 93% run up in the stock price over the past year. Like I said at the time, this seemed like a stock that was criminally undervalued, and now it seems like it's getting the love or recognition that it deserves. Thank you all for watching this video. I'll be leaving this DCF model available on the Patreon page for all of the Patrons and Discord members. A link will be in the description for those of you who would like to go and check it out, with all of the benefits as well that are included. You'll get this DCF and many others, as well as access to my recent buys, sells, a watch list of stocks with target prices, and the private Discord chat. Please also leave a like if you enjoyed the video. Let me know in the comments below what you think of Micron, and subscribe to the channel, obviously, if you haven't already. I'll see you in the next video. Good luck with all of your investments.